Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we are going to hit up a special video for uranium to look at potential price projections based off of historical ratios that we've seen in the markets. These are obviously projections. They are not my, expected outcome. I don't know where the price will necessarily go, but it is good to look to see if the ratios were to repeat like last bull market, what would those projections be if it were to repeat? Now, I am not guaranteeing that it's going to repeat. We're just doing this for a fun activity to see what potential outcomes could be given that these ratios were to repeat like they did in the previous cycle in the mid 2000s. So 2007 peak, if those ratios were to repeat, what would it look like? So this was spawned by good old NARF. It says, any chance we get a special uranium video from you tonight or this weekend? I want to see those projections. Where can we go and how high? So, well, let's do it. Let's do it if that's what you guys want. I have no problem doing that. So I've got, this is URA in the background, URA. I took the big mark in the middle out so you guys can read this with, I'm going to do it with Bannerman as well because Bannerman is a higher cost producer in Namibia. So we can also look at projections. So what I did is I took URA and I divided it by gold. And I said, well, if this is going to get back to its peak, what would it be? What would the projection be? I also did it against the Dow Jones Industrial Average. And here it is there. If this were to go all the way back up, what would it be? And I did that calculation. I also took URA divided by the M2 money supply, and I said, well, what would that be? And then I consolidated all of those uh, measurements or predictions and put them all on the URA chart. So we're going to look at these from the URA chart of different ratios compared to history. I also have this blue fractal that I grabbed. It's from Comstock Resources, just to show you guys this is last bull market and a company that uh, went up during that last bull market. And I scaled it to URA. So we could also have that as a potential indicator of how much that could move to the upside as well. So this bull market, we're going to go through it, and these are the projections that I have. So the first projection is the blue fractal, and that comes in at about $160-ish. So that's the first lowest projection of 160 versus URA. Now, $160, if we were to look at that from a potential return, is 160 divided by 26.79. From where we are today, that could be a 6 times increase, which could be the potential just based off the fractal that we've got. Scrolling in, we're going to go on up. The first one that hits is URA is $200 if the ratio hits 0.1 against gold at 2000. So this is a pretty conservative estimate from the stance of where gold sits, because gold is basically at 2000. And 0.1 is the ratio that it was last bull market. So it'd be 2000 times 0.1 is $200 for URA. Now that projection would be 200 divided by 26.79 is 7.5 times increase from where we are today, which is a very big projection to be projecting it from where we are. But we are still very early in this commodity bull market, so maybe it's possible. Now, if we keep going up, the next projection is against the Dow Jones Industrial Average. What I did is I calculated the Dow Jones Industrial Average and I said, well, let's say we hit it where we get like a 37% decline. Now, that's not what happened last bull market. Last bull market, um, the Dow went upward and actually exceeded its peak. So this is like the ultra conservative um, take for the Dow Jones Industrial Average of where the Dow Jones is. So I am estimating Dow Jones going down 37% from its peak to 23,000. This could vary greatly. We could go and do exactly like we did last bull market where it went up. So maybe the Dow Jones is actually more like a movement up to 42,000. Now that's going to move that dramatically for URA if it goes to something like 42,000. So if that's the case, if it's 42,000 and it's 0.1 against that, because that's what the ratio was, it just happens to be the same against gold as well. So if it's 42,000 times 0.1, sorry. It's 230 divided by 23,000, 0.01 times 42,000. It's $420 for URA, and that projection would net a 15.7x. So that ratio obviously is highly dependent on where the Dow Jones Industrial Average is going. And if we were to hit that same ratio of 0.01. So it ranges anywhere from $230, which I would consider to be a more conservative estimate if the ratio were to hit again the same ratio, all the way up to the low 400s is my guess if the Dow Jones goes up during this time. Scrolling up, URA versus the M2 money supply, we would be priced at $289 if the M2 money supply remains constant, which it won't, and we hit the same ratio as we did last bull market. So if that were to occur, 289 divided by 26.79 nets you a little bit over a 10 bagger at 10.8 times your money. Scrolling up to see if there's anything else. Whoa, we've got URA is $400 if UX1 goes to $200 a pound and the ratio were to repeat against each other like the last bull market. Now, I don't know if what the peak of uranium will be. I know that URA did not peak at the same time that the physical uranium peaked. So this is taking a shot. Maybe uranium goes to 250 or 300, but this peaks against it at $200 a pound. I just grabbed that as a potential case. So 400 divided by 26.79 nets you almost a 15 bagger if that were to repeat and the ratio repeat. And that's the highest one I've got is $400 price projection against the physical price of uranium if uranium goes to $200 a pound. Now, this is just for URA. This is not my predictions, guys. This is just me playing with numbers of against different assets. And these were some of the assets that I chose to do it against. I also did the same exact kind of measurements as I did with Bannerman Energy. So I did the same thing for the most part for against Bannerman. So the first thing I wanted to say is last bull market, Bannerman went up about 81 times from total bottom to total peak. So it's about an 81 bagger last bull market. The fractal I grabbed this fractal of last bull market and kind of tried to scale it over this one. I tried to as best I could. And then we'll get to see if the same 80 bagger were to repeat or 81 bagger, what would it look like? And that's going to go from the bottom here of this. I tied that in. So let's see what this looks like. So if we were to go on up, the first ratio that I have it comes into play is Bannerman could go to $40, and that is the same uranium per pound ratio as last bull market if you were to compare it to a $200 per pound uranium price. Um, I know this, I think, peaked out a little bit early versus it, but let's just use 200, use the same ratio. So what does that ratio mean? It means that it's the same ratio as last bull market on a dollars per pound calculation. So how I calculated this is I took their 207 million pounds of uranium that they've got in proven reserves. I multiplied it by $40 to get a market cap. Then I used that market cap and divided it by the 371 million market cap that we have today. So Bannerman would be priced at a $40 share price when using that calculation of $40 per pound. So if it's $40 for the share price divided by, I think it's at 247, yep, 2.47, that nets you a 16 bagger as a return in Bannerman. If we continue to roll up and let's start to use some of the ratios, the next one that comes into play is Bannerman is at $89 compared to the uranium spot price of $207. I used 207 because it was an easy rounded number to use. So roughly $200 a pound of uranium. It's $89 share price, which is quite aggressive. 89 divided by 2.47, that's you a 36 bagger. And again, guys, I don't know if this is going to occur. These are just calculations. The next one going up is against the M2 money supply. If we were to calculate Bannerman and it were to get to a ratio as it did in 2007, and that same ratio were to repeat, Bannerman would be priced at $96 compared to the M2 money supply. As we continue to go up, if we compare the ratio against gold, Bannerman would be priced at $106 compared to gold at 2000. And we were to compete, if Bannerman were to repeat the last bull market, it would go to roughly $137 if it was an 81 bagger from the bottom. And then if we were to take the bottom here and repeat it of about an 81 bagger here, this is what it looks like for the complete same movement as last bull market would be 102. This here is scaled a little bit to try to scale it to the size that this fractal is in the beginning. So that the scaling is 135. The same move is approximately about $100, which compares to all of these movements of the ratios. So the 81 bagger and these ratios are basically all stating the same thing. Now, I don't know if it's going to go to that height. There's probably dilution in this move downward. But again, there's also more value in the company than what it was before. So it's not going to be a perfect calculation here, guys. And I'm not stating that these are, that they're going to be exactly the same. These are just numbers thrown out for a potential movement based off of the ratios and previous bull market movements. And they all seem to gather around the $100 range if the last bull market were to repeat this bull market, which I don't know if that will be the case. It could be bigger, but remember, there's dilution. So maybe in order to get to 100, and I'm not stating we're going to get to 100, guys. That's a big move. We're going to have a higher uranium price to basically offset the dilution in the stock. So that's what I've got, guys. That's kind of the ratios and the price projections that could potentially occur for this bull market. Again, there's going to be dilution in these companies. They may not go to the same heights, or maybe they do because they've added more value to the company in terms of proven reserves, in terms of where they're located from being an explorer now to a developer that is going to be closely to developing. And remember, those companies get higher premiums as they get closer to producing pounds, or if they are producing pounds, those pounds in the ground get much higher valuations than a explorer that's got pounds in the ground. So hopefully this gives you guys something to chew on. Hopefully it gives you something to think about. And those are, I think, the potential projections based off of all of the ratios that I follow. So hopefully this reaches you well. Hopefully you guys are holding on to your shares for this uranium bull market. I know there's a little bit of volatility going on. If you guys like this, give me a thumb up, subscribe to the channel, subscribe to the website if you haven't, and we'll catch you guys next time. This is Finding Value.